Good morning, everyone. Welcome to a new week, a new day, a fresh live stream. I'm excited that you're here. I am glad it's a new day. Welcome. I'm getting a little couple things here organized. How's everybody doing? If you're here for the first time, my name is Tyler, and I'm going to help navigate you through the wild world of day trading futures. Oh, I don't have a light. There it is. Isn't that amazing how a giant, you guys can't see it here, but I have a 42-inch light that is about 1.5 feet from my face. And it's a drastic difference. Look at that. Look at that. And then look at that. It's just like night and day difference. Anyway. Good morning. If you're here for the first time, I'm going to be helping navigate you through trading futures. We're going to be focusing on the Nasdaq. I'm going to be sharing my daily trading bias. I'm going to be talking about order flow. We're going to talk about ICT concepts. We're going to be talking about the new day opening gap here. ICT talked about that a little bit here over the weekend. So it's going to be a fun and full live stream today. So if you are watching this after the fact, you can jump to the key moments using the chapter markers below. And lastly, if you do or considering using prop firms, if you're like, I want to save my capital for when I become very profitable. Well, you can use Apex. You can use a funded futures account, and you can use Apex, and Apex has a code, DTJ, that will give you anywhere from 50 to 90% off depending on the promotions that they're doing. But if you use the code DTJ, you will always get the most updated discount that Apex is offering. And you can see that on the top of my screen. I don't think we're doing, we have the 80% off anymore right now. I think it is 71%. So let's pop that up there. 71%. Boom. And then let's go ahead, open in prayer, and then let's take a look at the charts. Father, we honor you. We set aside time this morning to acknowledge that you are in control. Father, that you are Father in heaven and everything is under your feet. Father, we thank you that you are King of Kings and you're Lord of Lords. And Father, we submit ourselves to you and your leadership. I thank you, Father, for your goodness and your kindness, for the mercies that are new every morning. I pray for a blessing over every trader that is a part of this stream. Father, that they would see increase in everything that they set their hands to. Bless this time in Jesus' name. Amen. They extended the 80%, JB. No surprise there. I don't check. Honestly, I really don't. I appreciate the support, but the discount's more for everybody on the stream. So I really don't pay attention to all of that. So let's change that back then. 80% it is. Here we go. Boom and boom. 80%. 80% off, extended. They do that because they know they can't make any money otherwise. They make money off the 80 and they make money off the 90. So, and when it's on the 71%, it's like people go crickets. They disappear. So they know they can't do that for very long. They did it actually in the month of January for an entire month. I was shocked. Got 10 minutes before the market open here. Let's take a look at the markets. We're going to start on the weekly. We're going to zoom out. We're going to take a look at the market. Is that set correctly? It's set. Okay, we're good. All right, so we have the first things that I want you to make sure that you guys are aware of. We've marked out our previous week high and our previous week low that are sitting here and here. We've already ran the high. Honestly, I watched ICT's stream over the weekend, or not stream, but video. And even before he said something, I'm like, I bet you he's going to say it's going to draw up to this volume imbalance. So he thinks it's going to draw up to this volume imbalance. I think it's going to draw up into this volume imbalance. Not just the weekly, but if you drop down to now the daily, you're going to see I already had this marked up. We had this volume imbalance sitting right here. This is the target. That's, to me, is the target on the higher time frame. That's what we're seeing, and we want to see price reach up into. Now, what happens after that, I have no freaking clue. I have no idea. We created volume imbalance here as well. So either we come here and then we sell off, which I think that's probable, just because of how heavy this entire last week was. I mean, look at how heavy this is. We could reach up into here. Hang on. Let me jump to just the continuation chart. So this is the continuation chart here. And then let me get this so it's correct. We want that selected. There we go. Okay. So we got on the continuation chart, we have that volume imbalance sitting right there. Okay. So with the volume imbalance sitting right there, we have overlapping swing lows. I'll zoom in here a little bit. Okay. So we got overlapping swing lows here and here. So if we want to push higher, we could go up to that. But look how properly this has been, these wicks. Look at these wicks. Look at their reaching, and then we extend. We do another one of these, and we extend lower. This is efficiently delivered, in my opinion. I'm seeing this as efficiently delivered. Like, I don't see why price would want to go higher than this right now. Because if it's going to go higher than this, not only does it have to go through this and through this order block and through this, the next logical place would be way up here. That seems really, really high for price to try to reach up there. So my initial is this volume imbalance. And if we can see a sell-off from there, I think that's probably most likely to see some type of sell-off. So NQM. So let's drop back down to the daily. Okay, so I have our daily time frame mark, our previous day high, our previous day low, and this is our previous week equilibrium. This is going to become a draw on liquidity. So right now, I would like to see the volume imbalance hit and then us reach potentially down to the midpoint of this wick on the daily chart. That's kind of what I'm looking for initially, where my attention is going to be drawn to. The Friday's midpoint of the range tends to be a decent draw on liquidity. So jumping to the 4-hour, we opened higher. We have our new day opening gap or new week opening gap sitting right here. So that's going to be the 24th, 324. That's how I mark that. And because we have the 20th sitting right here, I really don't care that much about these new day opening gaps. Actually, I'll leave this new day opening gap, and the main reason is if you look closely, you'll see this wick here and this wick here both found resistance there and then retraced there. So if price comes back down, I could see us, setting up the breaks there, breaking right here. So I want to leave that one. This one I really don't care as much. I think I'm going to remove that one. Okay, so this is the 4-hour. On the 4-hour chart, we don't have any reversals, potential reversals on the 4-hour. So let's drop down to the 1-hour. We had a 1-hour reversal model right here. I wonder if I would have to look in this chart here to see if we have a 5-minute entry. So we'll drop down to the 5-minute. That's midnight. That's 1 o'clock. So it'd be between 1 and 2. Let's look at the 5-minute between 1 and 2. Let's see if we get anything. 5-minute between 1. Yep, it would have been right here. Here's would have been your 5-minute entry for that 1-hour reversal right here. Boom and boom. And it was respected. Right there. It closed barely, but eventually moved out of this 5-minute fair value gap. So we can see that 5-minute fair value gap found support and then it expanded higher. Okay, so that's the 1-hour reversal. It's been working quite well over the Asia and London session. I'm just sleeping. I'm not paying attention to that. So I really can't do anything about that. So let's jump back up to the 15-minute here. We got a 1-hour SIBI. Let's jump to the 1-hour again, I guess. We got a 1-hour SIBI that we are in right now. And we've reached the midpoint and we've seen some rejection there. That could possibly be the case, and we could retrace some before we extend higher. I don't think we're going to run for this right off the open. That just seems too easy. And considering we've already had a pretty big opening run higher over midnight, over Asia and London, we could see a retracement maybe down to this initial order block and then maybe get an expansion. So let's go ahead and mark our midnight open. We got 4 minutes till open here. This is our midnight open here. Oops. Midnight open is in line with this high. Midnight open, there we go. And then let's mark our opening range from yesterday. Opening range would be from 4 o'clock, so let's drop down to the 15-minute. There we go. So I already like the 930 model for today. I probably will look at taking the 930 model this morning. All right, let's zoom out of that. Let's put that at the 15-minute. We're good there. We're up in an hourly fair value gap. So we've reached an hourly fair value gap. We've touched the midpoint. I mean, look at that. Look at the execute. Look at that. Isn't that's algorithmic. Boom, 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 right on that center line of the hourly. Come on. I do not like how we've swept these lows already, and we potentially could push higher. We got a minute 47 left. But I'm still the chances, the odds of a bearish 930 model is like 70%, so I'm probably going to take it. Even though we have relatively equal highs, I'm not going to look for an extended move, but I think it makes sense to try. Let's see, what is everybody else doing here? Good morning, Northern. Josh, JB, Tony, Alex. JB, can you show me when you have a second how to determine volume imbalance? You bet. I'll show you. Real EQ lows, 238. All right, 1 minute till open. $9.30 played out. I'm going for an extended move here. Seeing if it wants to reach down into here to that low. Nope. So I'll sell that before it goes negative. But that was a nice 930 model. Now we sit and wait. We let the market set up, see what it wants to give us. Did we sweep that low? We haven't swept this low yet. We'll see if it wants to reach a little bit lower. We have a little bit of liquidity down there. Opening range gap. Nice. It landed on a breaker right there. This would have been the breaker. That would have been the breaker. Let's see if it wants to expand lower here. These equal highs, though, are the reason why I'm not really looking something heavy. I would like a little sweep of that. That would be nice to kind of... I mean, you got to think that's something that it's going to want to hit. But either way, we're going to sit and wait patiently. We got news at 9:45. Ted, something went wrong on my copier for that trade. Sorry about that. Brady, what's up, my friend? Ted, Esteban, how you doing? Good morning. I loved your recent video. I got Apex set up over the weekend. Still trading on paper for now. Good luck, everyone. Way to go. Yeah, this is what I was concerned about, is that if we ran this low here, that we could reach up for these equal highs. Let's check out calendar FX. What do we got? All right, so Monday, 8:45, we got Flash Manufacturing and Flash Services. And then 1 p.m., we got a speaker, so I don't care about 1 p.m. We'll just watch 9:45. That's here in about 11 minutes. Eleven minutos. Do we have our first fair value gap? I don't think so. No first presented fair value gap yet. My screen's frozen on trade of 8. It's not moving. Let's refresh that. Yeah, we got a big range to move lower here. I like the idea of us running. We never grabbed our London lows, which would be all the way down here. We got a lot. London lows are way down here. Here's our London low. Do you see how long that's taking to load? I don't know what's going on. But we got our first fair value gap. We're going to mark that and see if we get a rejection from it. MR, good morning. Is that Gene C or Gen C? First time tuning in. Excellent to learn from a fellow brother in Christ. God bless you, brother. Same to you, my friend. I'm glad you're here. God bless you. And then Queens, what's up? Good morning. Do you think NQQ will go down to fill opening gap from last night? How far? I don't know. I can tell you the draw on liquidity is this. I'll make it a little bit brighter. This needs to be probably a little bit brighter. That. This is going to be the draw on liquidity. So that's where I think we're going. If we continue to get these large green candles, I'll be looking for a long. But this is the obvious draw on liquidity right here. We got a 30-minute sweep on liquidity. So if we got a 30-minute after this candle closes here in 20 minutes, we could look for a 3-minute entry potentially. We'll see if it wants to do that. I don't like how we close. We swept the highs here, but we did not close above it. So meaning a deeper retracement. We'll see what happens. But I think it's wise to wait till after 9:45 before we consider doing anything. Even if you wanted to look at the breaker is sitting right here. Right inside this potentially forming new fair value gap right here. Let's see if it keeps this or if it's... And then here would be the breaker for your first opportunity, or your breaker could also be at 9:30. So we'll see how that wants to play out here. Honestly, I don't like that first fair value gap there. I really don't like this. If it's really aggressive, it's going to react here and push higher. But honestly, I would rather it run to 9:30, which is overlapping with this breaker here and a retag of the first fair value gap. I would rather see that. I would feel more comfortable, because the last thing I want to do is go long here and then have to hold through 15, 20 handles of drawdown. I don't want to have to do that. I really don't want to do that. But it could absolutely, if it's this aggressive. I mean, we have 3 large candles. It could just go right here and start moving higher. So this is what we're watching for right here. How does it react right here? I really don't like how we didn't close above. It's really hard for me to want to go long with that. I don't know. I need to decide how I want to handle this. But, I mean, this looks nice for a long. Maybe nice quick scalp right here. Let's see where this closes. I need to decide. I can't make I don't want to make a reactionary trade. All right, so I think what I'm going to do is look at my entry to be right around here. I would like it to go long. I want to see if it wicks down into this first fair value gap, and if it rejects it, that's going to be my entry idea. If we close heavy, I'm going to pass, but this is my interest right now. Closed right on the breaker. Let's see if it reaches down into the first fair value gap, or if it's just going to run right through it. I need it. I took a long. Okay, we got 2 minutes before news. Son of a gun. I'm going to get out. I forgot about news. I'm not going to take it before news. I closed that trade, everyone. I'm waiting until news. News could just slingshot this higher. I mean, it was a great entry, but I don't like the idea of taking it right before news. That gave us approximately almost 20 handles there. So the trade worked out, but I'm going to wait. We got 1 minute till news. There's our touch of the first fair value gap. Let's see if it closes below or if it stays above it. I think that's going to be a big sign right there. I just don't want to risk my capital on a news candle that's rogue. A rogue news candle. I don't want to do that. I mean, that looks beautiful right there. So if I want to take a long, I can go with inside this small 1 minute fair value gap. If I want to take a long. So that would have played out. We would have had to deal with a little bit of drawdown, but I would have moved my stop way higher, and I wouldn't have closed it right there. So I'm still back at where I was before. So I don't regret taking off that trade and just kind of letting things play out. We did sweep this high. That it invalidates that 1 minute fair value gap. We have respected this first fair value gap. I do see prices potentially going higher from this point. You guys are seeing what I'm doing. I have my execution screen on there. So this breaker is still playing out. I'm looking for a 5 minute close right here. A 5 minute close above that. We have a 1 minute close above it. That looks nice. That should be a nice expansion. Let's see if we can get an expansion right here for 20 points. Stops at break even. Target is 340. I'm at target at 320. Let's see if it might stop me out here. If it expands and doesn't stop me out, I might push this up to 340. Nope, it stopped me out. I'm okay with being stopped out, honestly. I would rather be stopped out than have to deal with drawdown. The only thing I could really probably improve on is if we're going to get a lot of this back and forth price action, taking profit at 10 handles. I should just take profit at 10 handles. Why not? Why not? Why not take 10 handles? I would have gotten three opportunities of 10 handle executions. That would have been 30 handles and I could have been done. Yet I'm sitting at pretty much break even because I didn't execute and I'm looking for a bigger move. So that's the only probably improvement I can say this morning is I should have taken profit at 10 handles, or do I just say break even, forget it, I don't care, break even, I'm going to look for that bigger trade. Well, when you add up all the break evens, I mean, that's 30 handles I could have executed on. 30 handles of profit I could have had by now. So taking smaller wins is not a bad idea. So let's, for example, you do 10 points right here. You do a 10 handle move. I don't know if it's going to give it to me. 19 seconds for this 5 minutes close. So there's a 10 handle spot just for a 10 handle push. Let's see if it gives it to us. Doesn't look like it. Nope. I shouldn't have done that. We're going to sit and wait. I'm going to wait for 10 o'clock. That was me thinking about the 10 handle misses that I missed, and I shouldn't have traded that. That's just the truth. Have a great day. I'm not in the mindset for this anymore. I'm going to make myself wait. I'm going to watch a trade run without me. That's what I need to make happen here. Totally feel you, man. Not a single fair value gap on this expansion higher. I bet you there's probably one on the 2 minute though. No. There's one on the 3 minute. Actually, that looks really nice if price can come back down into there. Three minute, and if we can get a 3 minute before we hit this high, this would be our 30 minute. This would be our 30-minute reversal. So we got our we have our this candle right here. We ran at 9:30. We swept it. We're gonna close above it. This is our 3-minute entry that we can go long in. But we got 7 minutes before that takes place. That's great, Brad. Bradley. Brad, I will be doing another video on connecting your Apex and Trade account to TradingView if you use TradingView. That's my next video. And then the video after that I'm planning on doing is using AI for your journaling. I think that's the video I'm going to be. I talked about it on Friday a bit, but I'm going to expand on that, and I think it'll be good. I'm going to remove the execution screen right now just so you can see a little bit more. Just sitting here waiting, folks. Sitting here waiting. If you're appreciating the commentary so far, hit the like button. I appreciate it. Thank you, thank you. Tyler, good morning. We had some highs and we're running for this yellow box, which is a volume imbalance. NQ is about to hit it. ES is a little bit a ways. Not too far away, but Be nice to see a sell-off right here, right at 10 o'clock, right into this 3-minute fair value gap. That is at 276. I got a limit order set up at 276, the low of this 3-minute fair value gap. In case we got this 10 o'clock candle expand lower. That's kind of what I'm looking at. I want to see if it wants to expand lower before it hits this. That'd be nice. And then I'll move it higher if I have to, depending on where it hits this 3-minute. But that's kind of what I'm looking for, is taking a long inside this 3-minute fair value gap. We also have a 4-hour close. Big expansion candle on the 4-hour. Nothing there for us to really use. Hourly candle, another expansion. We closed above that hourly fair value gap. So bullish as well. So nothing there. The only thing that we potentially have is this 30-minute sweep, purge lower, and expansion. We're looking at this candle, 10 a.m. candle, looking at to find support inside this 3-minute. Where's my time frame? I don't want to do anything inside this right now, folks. See all the wicks, small bodies? I'm not interested in that right now. Good morning. We had some highs taken out. I see. Yes, Tyler. Do you share charts live on your Discord in case we miss something that we can something we can refer to your charts? When I'm done trading, I'm done trading. I would say for the most part. If I look at the charts, I'll post something, but I can't say it's abundantly consistent for the PM session. Because when I'm done trading, I'm done trading. So the Discord is going to be less for alerts, more for questions. So I'll respond to any questions throughout the day. So if you are on the charts and you're like, what do you think about this? I'll respond to it and give you my thoughts on it. But I'm typically, when I'm done trading, I'm not looking at my charts. And that's to protect my profits. That's to protect me, to be honest. Bradley, I do have a Discord. Yes, it's part of the. It's part of my Purpose-Driven Trader Academy, which is a course that teaches you everything that I know about day trading and puts it in an organized fashion. You can find it down in the description of the video. It's called dtjacademy.com. That's where you can find it if you guys are interested. I don't promote it that much. I did when I first launched it because I gave, it was a big kind of campaign. But outside of that, now it's for those that see the value in it. But there's like inside the Discord or inside the Purpose-Driven Trader Academy, I think there's somewhere around 50. I have like 50 videos that like 45 of them aren't even, I don't teach anywhere else. I haven't taught anywhere else for the most part. In the way that I did it in the Discord, very organized, intentional, explaining each concept. So right now we're still waiting. One minute, 5 minute. We have a 5 minute fair value gap right here. So my expectation right now is that this 5 minute is going to hold and we're going to wick down into the 3 minute. That's how I would view this. Okay, so there's the 5 minute and we wick down into this 3 minute. I mean, it seems kind of sketch to stop 1 point below that volume imbalance. That's why I'm looking at this 3 minute as finding some support here. I have my limit order set at the bottom of this 3 minute fair value gap. I don't have a problem moving it higher depending on reactions, but if we get a quick purge, I'd rather be at the bottom of this range than the top of the range. We'll see where this next candle closes, this 5 minute. Do you trade any other indexes? No. I've thought about it. Right now I just don't. I've been watching gold. I would like to do more with gold. I want to see if this 5 minute is going to close inside the 5 minute fair value gap right here. So I want to see where this candle closes. Is it gonna? I'll go in if that wants to get me. All right, so let's see where this closes. I'm in this trade. At the low end of the 3 minute fair value gap. It's what I wanted. We got an order block right here. We got a breaker right here. I'll take this loss in the chin if it sells off on me. I'll take it in the chin. I like the way this looks. And I don't want to just do a 20 handle for this one. I want to go all the way up to the top. So I'm going to sit and wait and let this play out. It's either I'm going to take a loss in the chin or it's going to hit target. So you can see where my execution was. It's based on this 3 minute, on the 30 minute reversal, which was down here. We sweep 30 minute swing low. We have an expansion. We wait for a 3 minute retracement from the 30 minute, and then we look for an expansion, a continuation. I want to see this 3 minute close green. That would be nice in 20 seconds. Nice green close. Technically, on the 1 minute, it was a red candle, but we'll let this play out. This will be my one and only trade. If it loses, it loses. If it wins, that will be a nice way to end the trade, end the day. Look where the one standard deviation is from this drop right here. Okay. So from this move lower, this is, I would call this the manipulation stage, followed by our expansion. Look where one standard deviation is. Right here. This is a safe target. There's a good chance we go higher than this. But I'm not going to be greedy. I'm going to take my money and get out. That's going to be it's going to be a 60 handle win from where I entered. One handle, 1 point, Adam. Yes. We just got a 5-minute BPR, an inversion. What's that? That's a 3-minute BPR. I think it's safe to say let's move our stop to break even. If it comes back down all this way, I don't want it to run against me. We had a little sweep of liquidity right there. Internal sweep. I don't want it to run all the way against me. I'm going to go ahead and sell 3 contracts here. And I'm going to let 2 more run. If I'm going to do that, I might as well sell 1 here. And then have another one there. See if we can run a little bit higher. Maybe at 1.5 standard deviations. 370. So right around there. See if it wants to power through this and find support here. Good morning. Why the switch to MNQ instead of NQ and using 5 contracts? Aren't you paying more in fees? Yes, but I also lose less money when I have a loss. It's a psychological thing. It's just, it is what it is. I understand I'm paying more, but I also need to manage my risk. It is more important to manage risk than it is to not pay fees. I'll pay the extra fees to be able to manage my risk appropriately. Come on. It's there. It's going to reach it. With one mini, you can't do partials. That's right, Felipe. Yeah. That's another reason. If I'm doing one mini, I'm doing 10 micro contracts, and it's just all in, all out. So right now, I had 5. I sold 3 because I'm like, you know what? It would be very stupid of me to allow a 50 handle trade turn into a 0-point win. So I'm like, I'm not going to do that. I'm going to go ahead and take some off. So it looks like we're going to hit here. Nice. Oh, it did not fill me. What the heck? There it goes. All right, so it filled my 1 micro. Let's see if we expand. If we don't expand, I'm going to close it. We will put it, we have an order block right here. These series of down close candles, you can see. I'm going to put it right underneath that. That's going to be my break even, or that's going to be my stop out. And I'm going to see if this wants to continue higher. All right, so the candle did not close above this. It did not close above our last swing high. I don't like that, but it doesn't mean it can't still run. I see that your ticker symbol is NQM 2025. Is that just MNQ, or is that something different? That is the contract. So there's 4 contracts in a year, and futures always trades the future contract. So you have one for March, you have one for June, you have one for September, and one for December. So we always trade the nearest upcoming contract. So right now, June is the one we're going to trade. So you got March, then you have June. So March is MNQH. June is MNQM. And then September, I can't remember. In December, I can't remember off the top of my head right now because I don't really pay attention to the contract letter. But that's basically what it is. So if I'm on NQM, that means I'm trading mini contracts. If I'm on MNQM, that means I'm on the micro contract, the micro version of the June contract. It's a little confusing, but that's basically what it is. Sitting at about 60 handles right now. So yours says MNQ or NMQ1. Is that where I should be? No. On TradingView, I'll look at the top right corner of mine. The top right corner says NQM 2025. That's the mini contracts. Okay? So I don't trade. I do my analysis on the minis. I do my execution on the micros. So what you're seeing is my analysis over here, and the black screen is the MNQM. Okay? So when you're doing your analysis, where you want to analyze what's going to happen with the trade, that's going to be on the contract NQM 2025. Your executions are going to be on MNQM 2025. All right, so we had it close above. Let me mark this high. Let's see if we're getting a sell-off here. It looks like we might get a little bit of a sell-off. I just want to see if it's willing to go higher. If this closes red and we get another candle that runs above it, I'll move my stop to that low. Sorry, you can't see it. If we get a candle to run, if this closes red, that candle there, and then we get a green candle to close above it, I will move my stop loss to this yellow line. So now I want to see us close above this down close candle, or if a series of down close candles is created, I want a green candle to close above it. Josh, if you're talking to me, I'm talking about right here. You should see me highlighting it right now. This is what I do my analysis on right here. You can't see the actual on MNQ here on my execution chart. You won't see it because it's up in this top left corner. That's just right off screen. All right, look where 1.5 standard deviations is. It's at this swing high. That's kind of what I'm targeting, is this swing high right here. And on the hourly, we got a nice large volume imbalance right here. You can see that, all of this. So I'm targeting this 1 hour, the 1 hour standard deviation, seeing if it wants to go higher. And I'll take profit there. It's actually the swing high is actually exactly at 370.25. So that's really, it looks very, when I see a level like that line up, okay, so here's the standard deviation, 1.5, and it's 20,370.5. And then this swing high right here is 370.25. That's really close. So I'll reach for it, see if it wants to reach for it. I'm not opposed to seeing if it wants to do that. Let's see if we can close above this in the next 6 seconds. Okay, we closed right at that. That's still okay. Let's see if we can get an expansion here. How do you see your entry position? It's represented by a blue line. Okay, if you go under candlesticks on the top left, you'll have a candlesticks option. Select candlesticks, or excuse me, select the configured chart elements, the settings icon. Select MNQM, the chart that you're on, and then you can see this blue line, this blue box. It says buy fills. You can change that color to a different color if you want, but mine is a blue fill line, so that's what it shows. All right, so we created potentially a 30-minute wick right here, followed by an expansion. I would love to see an expansion right here. That'd be really nice, be really convenient, to be honest. And if we can close above this, I'm going to move my stop loss to this low. I'm just waiting for the close above basically this level here. Once we get a close above that, I'll be moving my stop to this level right there. We have a 5-minute fair value gap that's sitting here that's unfilled. So we may reach back down to this. I don't know. I mean, it overlaps. I would prefer it not to reach down there. This is what I want to see. I want to see that expansion. Now let's see if we can hold it and actually close above it. If we get this candle, a big wick, and then we close red or we close back in this range, that's not very fun, but tells me we may see lower prices. I'm going to go ahead and move this here. I think we're going to get, it's going to run lower, and I just don't want to I don't want to lose an extra 15 handles. So I'll get stopped out here if it wants to stop me out. I just don't want it to run all the way back down here and lose 15 extra handles when I don't need to. Especially after that wick. That wick tells me we could start seeing a drop lower, and I'm like, yeah, let's just move our stop loss and get stopped out at a higher price. Here's the stop out. All right, so stopped out, folks. That is our last trade for the day. Great trade. Roughly, I took a majority off at about 50 handles. Took another contract off around 60 handles. And then we took another off around 50 handles again. So, beautiful trade, folks. Do you see how we read that candle? I want to highlight this, okay? Do you see how we swept this high with this candle and then closed red? That is a signature in price that has a pretty high, what would you call it? predictive level that it's going to run lower. You can also do it the other way. It could be a green candle. It could wick lower and close green, and that means it's going to run higher. There's a good part, like this candle right here. To me, that was this was a purge. It ran really low. It would have stopped me out way down here, so I'm glad I took it. But then look what it does. It wicks lower, goes into this 5-minute fair value gap, and closes green. This is a signature that we are potentially running this way. Now, could you be wrong because you already ran a very key level? Yes. So this only works as if you have a clear draw on liquidity, but the draw on liquidity is already grabbed. We already ran it. We just don't know if it wants to run higher or not. It could run higher. It could not. So if you want to use these as part of your analysis, you need to make sure your draw on liquidity is very clear and obvious to the upside if you're going to do that. Now, why did I say that this was a signal in price and us dropping? Why? Because we already ran a key level. We hit the level that I wanted. Does it want to go higher? I was hoping so. But when you see something like this and then it closes red, that tells me it's going to go this direction because we already ran the key level that I was interested in. So now it's just a matter of, I don't know. We don't know where it wants to go at this point. I think it wants to go higher, but when does it want to go there? We don't know. This is why you only want to trade when there's a clear draw on liquidity. What was the draw on liquidity? It was this yellow box. Have we hit the yellow box? Check. Draw on liquidity achieved. Now that we have hit that liquidity point, what's the next draw on liquidity? I don't know. Quite frankly, it could be this whole volume imbalance, and it could look like this. Okay? That's the hard part of trading right there. People trade this, and they get chopped up. I get chopped up because I forget that the draw on liquidity has been achieved. And then I look at lower time frame analysis, and I'm like, oh, well, look at this. We just, we did this. We did that. We found support here. We should run higher. But the truth is, when there's not a clear higher time frame draw on liquidity, it can take time. It could say, yeah, this breaker is going to work out, but maybe it wants to hit it 3 or 4 times and then go. Maybe it wants to drop lower into the fair value gap, or maybe it wants to reach down for this liquidity down here before it runs higher. That is the hardest part of trading, is we keep trading when our higher time frame draw has been achieved and we think that we know where it's going to go next. Right now, I don't know. Quite frankly, it could do 2 things. It could fill this, or it may just want to run down to London low. Who knows? Maybe it wants to run midnight open. Midnight open and London low haven't been tagged at all. They're wide open right now. The Friday's range, the equilibrium of Friday's range, I like that as a draw on liquidity. So now that we hit here, I'm sitting on my hands waiting to see, do we get displacement this way? And if we do, I could confidently assume we may see lower prices to the new draw on liquidity, which would be somewhere here, which could be potentially down here. But right here where we're at, we just have to wait. You also don't want to say, oh yeah, we hit the target, I'm going short right now. Because it may want to purge higher. It might want to reach one more time. It may reach a 3rd time to fill in this opening range gap. We don't know. So we want to wait for that 5-minute, 15-minute displacement to the downside. And quite frankly, we don't have a 5-minute change in state of delivery till down here. We got 3 green candles connected that make this the change in state of delivery. That means we're not looking for, we could still go higher. We could come down to here and still go higher. We could mess around anywhere inside this range and we still could go higher because a 5-minute change in state of delivery is going to be down here based on these green consecutive candles. There's our change in state of delivery. That's what we're looking for. Jump to the 15-minute. What does the 15-minute look like? Well, look at that. It's all green. We got no change in state of delivery on the 15-minute chart. Sure, you could do a 1-minute change in state of delivery, but how confident do you feel about that? I don't feel very confident about that. That would be right here. So your 1-minute change in state of delivery is right here. So have we had a 1-minute change in state of delivery? The answer is yes. We've had a 1-minute change in state of delivery, and you could wait for price to come back up into this 1-minute change in state of delivery, and you could go short. But that's not convincing enough to me. Especially since it's really messy right here. If it was really clear and it went like this, and we had a breaker, that's clear. I'll take that. But when we got this choppy chop, who knows? I don't know. And so I just want to be careful. Okay, so JB, was it you the one that asked about identifying volume imbalances? I said I was going to talk about that. Let me go to the volume imbalance. All right, so volume imbalances are on every time frame. Okay, right now we are on the 1-minute time frame, and I can show you volume imbalances. If we get really close to the charts, look at the spaces between the bodies of candles. So here's a space right here. That's a space. That's a volume imbalance. Okay, I'm gonna do this, and we're gonna remove that. There's a volume imbalance right there. Okay, we keep looking. Small 1-minute. Oh, here's another volume imbalance. Okay, so there's volume imbalances on the 1-minute, on the 2-minute, on the 15-minute, on the 30-minute, on the 4-hour. It is the spaces between candles. Well, let's jump up to the daily. Here's the daily time frame. What do you see? The yellow box that I was looking at is tagged to Friday's low and Monday's opening price. Okay, that's a volume imbalance. No candles, no bodies of any candles have ran through this. So this will stay effective until we see a daily candle's body close it up. So for example, this was a volume imbalance right here. This daily volume imbalance would stay in effect until we saw a body close through it. So on Thursday, this candle closed through it. So this volume imbalance is now done. Here's another one. Was closed through it. Right here. Look how it was referenced again before it dropped. Okay, I'm going to get really close. Volume imbalance. We closed below it. Look what it did on this candle before it dropped aggressively. Look how it went into that volume imbalance right there. How much did that go in? Come on. Why is it not giving it to me? There it is. All right, maybe I need to zoom out a little bit. Two and at 2.75. So basically 8, 9, 10, 11 ticks It went into this volume imbalance 11 ticks and then rejected. That is why we reference these levels, because it will come up and reference them. It will close through them. It will reference them. We just want to know where they're at. So on daily time frames especially, that's why we have them here. So we have another daily volume imbalance right here. This will be a draw on liquidity. So the way I see this is we touch this one, we close above this one, something like that, and then we're going to run this one next. Okay? And how do we decide which one's more important? Well, we go with the oldest one. So this one's freshly made. This one was made 2 weeks ago. So this one's older, and we see price that has aggressively left it and now wants to come back up to it. That's how we do it. This brand new one that was created, it could be here for a day, 2 days, 2 weeks. It just needs to make sense with the total, with the whole narrative of where price is going. We've seen a huge drop on price lately. Then we saw all this consolidation. But then what's sitting right above it? This nice volume imbalance. So my thought was, well, let's reach up for this and then see what it wants to do. So at this point, I'm done on the day. I'm done trading. I want to know what's going to happen next, and I don't know that answer. By the end of the day, we will know and have a better idea what to expect. Could this candle just lose all of its bullish momentum and then run lower and then close in this volume imbalance? Yes, it could do that today. I don't know if it's going to do it today. I have no idea. Maybe we just stop right here and then the next day it wants to reach back up and fill more of this volume imbalance in. That's another option. Maybe we've reached the high for the day and this is as high as it was going to go, and tomorrow it wants to reach a little bit higher. That's an option as well. So we use these as levels to try to bring a narrative on where price is going, and this is how we put together that narrative. The daily time frame helps us frame where price is going to go next. All right, do you see how we finally closed above this level here, above this body's high? We finally closed above it. It should have been at that point that I moved my stop to this low. So I technically, if I didn't move my stop loss up, I would have still been in this trade, and now I would be moving my stop to this low right here. Because we just confirmed that this series of down close candles is now an order block for a continuation higher. Now, if it stops you out, then that's your sign that, okay, price is not following proper order flow, and it's just in a consolidation stage. Because it's consolidation, it violates all of our protocol. Consolidation ignores protocol for the most part. Order blocks, fair value gaps, breakers, inversion fair value gaps, all of those can be ignored when you're in a consolidation. But assuming this isn't consolidation and we closed above this low should not be ran until it hits its target. And we had a swing high sitting up here. So if I was still in this trade, I got in roughly here. Stop, break even, target here. And we would that would have been 93 handles, and my stop would have been moved now to this low. So now I know I'm guaranteed to profit at least 38 handles, and we've closed above this level. So I move my stop to this swing low. It's considered a protected low, and we'll see if it wants to run to the actual target. Bradley, every analysis is on NQ and ES, but the concepts go anywhere. So everything that I teach is a reflection of ICT's concepts. ICT is a trader that you can go watch all his stuff if you want. I've watched all of his stuff, and I've condensed and organized his content into roughly 40 videos so that they're very concise compared to his 1,100 videos or whatever he has. I don't know how many videos he has. And his videos tend to be an hour to 2 hours long because he doesn't teach them systematically. He has older videos that will do that, and you should still watch those. But all my analysis is on NQ and ES, but they can apply to any futures contract, any Forex contract. You can trade it with that. I don't trade Forex. I stay on futures. So I have applied these same concepts to like gold and silver, and they work. They work just fine. The 30-minute reversal trade that we took on the 3-minute, right here, that trade right there, I could point out 10 of those on gold. I could show you an hourly reversal on gold easily. So the concepts still apply to anything. It's the concepts that you need to understand. It's the language of the market that you need to digest. And when you know the language, you can apply it to anything that you want. You can apply it to any of these assets, and you'll still be significantly further ahead than most people. Felipe, do you adjust for contract changes? Yes. So if you want to use NQ1 for your analysis, that's totally fine. Let me jump to NQ1 and make sure you have something selected. On your screen, let's see if I can do this. Make sure it pops up. Okay, so on the screen, on the bottom, you're going to see, okay, so my mouse is over here. Here's my mouse. On the bottom, you're going to see this B-ADJ. That's adjust for contract changes. So this chart will adjust to be the current asset that you're trading. So this level that you're seeing here is going to be the same levels that you will see on the actual contracts. Now, what could you miss if you're doing your analysis on the what, I don't even know what kind of contract you call this, on NQ1? When we go up to the daily chart, many times you will see different levels for volume imbalances. These volume imbalances can change. Okay, there's another little icon on the bottom over here again. It's called SET set. If I change that, the contracts change. Do you see how this candle is right now black, but when I select it, it changes to green? So you can go between them to find out what looks nice and what you like. But anytime there's a gap, you just want to make sure you're including the gaps. You can execute on them, that's totally fine. You just may miss small nuances that could be a nice target for you to identify compared to doing it on the actual contract. That would be the only thing. Because if I change this, I'm curious. I showed you this candle was green, but if I change, if I go down back here and I select that set again, does it turn black? It does turn black. I have mine selected, so if that means anything to you guys. Tesla is up 10% today. Tesla's up 10%. I bought a whole bunch down here for my just investment portfolio. I bought a whole bunch down here. Look, we are inside this volume imbalance on Tesla. So that's where I bought with the expectation that we could still run lower and sweep this low. And we didn't. We never swept it. So if I was waiting for that sweep, I would have missed out on grabbing some of these contracts. But now we are aggressively moving the other direction. That's nice. Let's take a look at gold. Let's see what gold. Here's Bitcoin. What's going on with Bitcoin? Down to 87,900. This is, to me, a market maker sell model. These concepts can work. People do say they work for digital currencies. So there would be the breaker. And honestly, I would call this the end of the market maker sell model. So I would keep an eye on 87,600. I think that's where we end up heading to. Oh, this is we're on the minute chart here. We could run to that level, or it could also run down to these equal lows down here. I like these equal lows better. 87,100. So I think that's where Bitcoin's probably going to end up running to. What else do we got? Silver. Ugh. That's just nasty. Let's go to the daily on silver. I only own silver. I don't trade silver. I own silver. That's why I have it on here. So I don't like any of that. Let's go to gold. Here's gold. Getting a retracement off of all-time highs for gold. We got up to 3,060. I see a breaker here, a low, high, lower, low. So I want to see price find support roughly there inside this daily fair value gap. So we could see this continue to roll over down to this daily fair value gap, and this is where I'd want it to find support, is in this area here for a potential move higher. Does NQ have spreads? Yeah, it's typically one tick, 25 cents. So if you get in at 20,300, your fill may be 20,299 and 75 cents. It's typically one tick, unless you're getting in on news. If you get on news, it's who knows what you get it at. Who knows what it's going to be at. Where did all the things go? There it is. See how we're just hanging out? This is what I mean by it not intense, like it not intentionally running a level. Once we hit this level here, once we hit the volume imbalance, it became lethargic. Yeah, it's still going higher, but I don't want to I don't want to be in this. I don't want to trade that. Look how, when we got in, guys, when we got in on this candle at 10:09, we got in. We selected buy on that down close candle inside the 3-minute fair value gap that we called out when it was at this high. I said I want to see it run all the way down to the 3-minute. I put my limit order at the bottom of this 3-minute. I ended up moving it and I got executed right in the middle of this wick. And then what does it do? Without any hesitation, it moves towards the target. That's the type of trading that I love. Like, it is exceedingly difficult for me to have to hold through this to see a higher price. I would rather sell all my contracts here and get off of the charts for all of this just to be able to gain another 20 handles. And maybe we see higher. I mean, that's why there's day traders, swing traders, long-term traders. I'm more of a short-term scalper. That is probably more who I am. I would like to be in for less than 10 minutes, less than 20 minutes. I've been in trade for an hour before, but man, it takes a lot of effort to force myself to sit in a trade for that long. And I'll get better and I'll probably learn to hold longer as I develop as a trader. But right now, I would rather just get in here, get out here, walk away with 60 handles, 60 points, and then come back for another trading day. It's been some good trading the last few days. We're green 4 days in a row now. 4 days in a row. I think that's what it is. James, ICT trader, is that inner circle trader? Yes, that is. It depends. There's a ton of people out there that have the name ICT trader to scam people. So just be careful on who you got. ICT has 1.6 million followers. And he will never reach out to you. He'll never talk to you. He just doesn't. So yeah, check out his stuff. It's long. You'll understand what I mean by it's long when you check it out. I'm kind of committed to right now seeing if we hit this 1.5 standard deviation. If I would have held it. That's basically what I'm doing. I'm analyzing my own trade to figure out if I move my stop loss here when I after we made this swing high, or after we created this order block, to see if we continue higher. So I'm just seeing if we are going to hit this this 1.5 standard deviation. That's all I'm doing. I'm not in any trades right now, and I'm not going to get in any trades. And for good measure, I'm logging out of my accounts. Yeah, Bannock, you can totally do that. You can totally trade EU on futures or on Apex. Absolutely. All your analysis can work on, all the analysis we do on here can work for that. I'm just not going to be verbally talking about my thoughts on it because I don't trade Forex. Maybe if there's more people that are interested in it, I don't have a problem taking a few minutes out of the day or a few minutes out of the live stream and touching on the things that other traders on stream are talking about. Yeah, I'm trading NQ, but you know, I can do an analysis on ES. I can do an analysis on, you know, EU or the pound, whatever may be trading. All right, look, we're about to hit it. About to hit it. So the analysis would have been spot on targeting this swing high, this 1.5 standard deviation. Maybe for another day, right? That would have been, how long would I have had to sit in this trade? An hour. It took an hour for this to hit to target. 59 minutes. I've done that before. What made the 30-minute reversal like very attractive? All right, so let's go through. I'm going to create a video here, guys. So I'm going to do a quick video. You guys are going to see it live here. I want to do my analysis on on the trade that I took. So we're going to talk through all of that. All right, let's see. I'm going to take off those logos here. Actually, no, Apex is doing that. Okay. Hey folks, Tyler here. Today we're going to be doing a video showing you the executions that I took for a 60 handle win for about 60 handles, hit to target, and we used the 30-minute reversal model, which is out there. There's other traders talking about it, but I did the execution here today, and I'm going to show you exactly what it is, how to use it yourself, and where you can actually put your targets to execute your trades effectively. So we're going to start on the 30-minute time frame, and that's what we're looking at here. On the 30-minute time frame, we are looking at the sweep of liquidity. So the 30-minute reversal is based on 3 steps. Number 1, we want a swing low to identify a swing low. Okay, so we have a swing low right here. Then number 2, we want to see a sweep of liquidity by the next candle. And inside this candle, we want it to close inside this range or in the opposite direction. So as you can see, if we get really nice and close here, you're going to see the sweep of liquidity, and then you see it close to the upside. Okay, that's requirement number 2 for the 30-minute reversal. Requirement number 3 is inside this 30-minute criteria. We need to go down to the 3-minute time frame, and we need to see a 3-minute change in state of delivery inside or after 9:30. So we're going to drop down to the 3-minute. We're going to look for a 3-minute change in state of delivery. Here is everything prior to 9:30. You can see we swept the low at 9:33. So this is our 3-minute change in state of delivery. So we need to put a line here, draw it over, and we're going to put a change in state of delivery. So we need to see a 3-minute candle close above this line. Do we have it before 10 o'clock? Check. Now, going back to the 30-minute candle, going back to this 30-minute candle, we are looking at, first we are looking at this candle here. Do we get a sweep of that liquidity? Check. Next, we look at the 9:30 candle, and do we get a change in state of delivery within this 30-minute candle before 10 o'clock? Here's that change in state of delivery right there, right? So check. Now we go to the next candle, 10 o'clock. So between 10 and 10:30, we are looking for price to come back down into a 3-minute fair value gap. So we're going to drop down to the 3-minute time frame. Okay. We're going to identify all the levels that I just shared before. Here is our level right here for a sweep of liquidity. Here's our 9 to 9:30 time frame. At 9:30, we sweep that liquidity and we run the other direction, giving us that wick down here. And now between 10 and 10:30, we're looking for that change in state of delivery. Here it is right there. That's 10 to 10:30, or excuse me, that is 9:30 to 10, excuse me. We're looking for that change in state of delivery between 9:30 and 10. We get it at 9:45. And then after 10 o'clock, we are looking for a 3-minute fair value gap for price to run back down into. So let me put a vertical line. Here is 10 o'clock. This pink dotted vertical line represents 10 o'clock. After 10 o'clock, we want to see price drop down into a 3-minute fair value gap. Well, the only 3-minute fair value gap in this case is right here. We see it run into this 3-minute fair value gap, and then we see it reject. We put our entry. Now, why was I willing to take this long? Okay. Before you just take a long based on a 30-minute reversal, we need to have a target. What is our target on this 30-minute reversal? Let's go back to the 30-minute time frame. Okay, so right now we have this expansion candle. Well, what is our target? Well, to find a target, we need to go to a higher time frame level. So let's jump up to the daily time frame and see what do we have as a target. Well, we have this volume imbalance. Over the weekend, I identified this volume imbalance as an area that price may want to reach up into before it continues lower or before it just sits around here and consolidates. I don't care what happens after. I just knew that I wanted to find this level as my potential area for a draw on liquidity, and that's exactly what we saw. So we're going to use this volume imbalance as our draw on liquidity. So now what do? we go back down to the 3-minute. We look at our fair value gap that we wanted to get into. So we've identified this 3-minute fair value gap right at 10 o'clock. And we're saying, hey, I want to take this 3-minute fair value gap here as my entry, but I need to confirm that we have a higher time frame target. Do we? The answer is yes. Look at what price does not run before we hit that. Look where this candle stops. This candle stops literally one point below this volume imbalance, and then decides to randomly run the other direction. And where does it randomly run into? It runs into the nearest fair value gap, which so happens to be a 3-minute fair value gap. Now, if you go to the 1-minute fair value gap, you're going to see some fair value gaps up here, I'm sure. I don't know if there is one or not. But our analysis for the trade that we were taking for that 30-minute reversal model, we are looking for this 3-minute. Why the 3-minute? Because the 3-minute correlates with the 30-minute. It's a correlation. If you're taking the inversion, if you're doing an hourly reversal, you're going to do it on the 5-minute. If you're doing the 4-hour, if you're looking at the 4-hour time frame, you're going to do a 15-minute entry. So on the 30-minute, we're looking at a 3-minute entry. And so this is the 3-minute fair value gap that we decided to go long in. So where did we go long? Well, I said I wanted to have my limit order set at the low in case it wanted to reach and go lower. I didn't want to get stopped out with a 20-handle stop loss. So I basically set my stop loss, or set my entry there, set my stop loss as 20 handles like that, and then I put my target. Whoops, this is the wrong one. We set our entry here. We set our stop loss at 20 handles, just like this. Okay? And we put our target right up there for 65 handles. Now, once price started coming down into here, I saw it get really low, and I decided, you know what? I don't want to miss this. So I ended up moving my entry to right around 20,279, and I got my entry there and set my stop loss still at 20. So I left my stop loss here with the expectation that we are still going to run for this, giving us a 60 handle winner, or a 60-point winner. And what does it do aggressively? It comes down into this 3-minute fair value gap before hitting the volume imbalance, and then aggressively moves towards the volume imbalance. Now, I didn't properly manage my trade correctly because I ended up moving my stop loss to right here, and I got stopped out. But if I would have left my stop at break even and waited for the swing low to form, because we could move higher, I saw that we could potentially go higher. Now, why do I think that we could have gone higher? Let's go into understanding how to set targets. I took our manipulation leg. Basically, it's the candles moving in the opposite direction of the potential target. So we knew that the volume imbalance was a draw on liquidity. So when we see this price action running against it, we're going to call that, or it's what we call the manipulation leg. So if you drop a Fibonacci tool on the high and the low, and you target one standard deviation, look where that target is. Here's one standard deviation right there. That was our initial target. Boom, we hit it. If you go to 1.5 standard deviations, that's way up here. And we hit it to the tick. We just hit that to the tick. Now, why would I decide to target 1.5? You have to look left. You got to look left to see if there's any levels that would line up and make 1.5 standard deviation an actual target. I'm not just going to say, well, I'm going to target 1.5. No, you can't do that. It doesn't work that way. You want to see overlapping confluences that support a 1.5 standard deviation based on that manipulation level. So what do? We look left. Let's drop to the 30-minute time frame. We see what our 1.5 standard deviation is. It's 20,370.5. Now, if I look left, look what we have around that area. Look at where this swing high is right here. Okay, I'm just going to mark that. And I'm going to make this obvious. I'm going to put a, where is that? To anchor, comment, price level. I'm going to give you a price level right here. What is that price level on that line? It's 20,370.25. What was our 1.5 standard deviation? Let's drag this line over so you guys can just see the magic of it, okay? What was our 1.5 standard deviation? Our 1.5 standard deviation was was 20,375.5. And what do we run to? If we put our Fibonacci tool on this candle up on the top, here, let me just do another price level. What is this level at? It's 20,370.25. That is the exact level that was that swing high. So we made equal highs, and it was right near that 1.5 standard deviation. So now going back to the 3-minute time frame, when we are looking for a move, I can say, well, I'm going to take a majority off at this one point on this 1 standard deviation, which is our initial target. This is really what we're looking for. This is the higher time frame volume imbalance that we really wanted price to hit. That's 60 handles in itself. That's a win. That's what we want. You could take all of it off there and call it a day. Now, if you're trying to teach yourself to hold for bigger trades, which I'm in that stage personally, then we need to go to stage 2, managing our risk appropriately. How do we manage our risk? Well, I did a poor job in this trade, and I'm going to tell you what I did and what I should have done. I was waiting for these down closed candles to be closed by a green candle. We get that right here. This is when I should have moved my stop loss to right here. So I should have made my stop loss to that point. I'm just going to move that because it's distracting now. I should have moved my stop loss to this swing low after the 1045 candle closed above these bodies right here. I didn't because I was looking at the 1-minute time frame. And if you look at the 1-minute time frame, this candle right here scared me. This candle right here wicks this high and closed red, and I'm like, oh crap, this could drop really far. So I moved my stop loss to right here. And we stopped out. But if I would have left my stop loss, even just at this swing low, which is originally where I had it, I wouldn't have been stopped out. And I could have let this trade play out, let this turn into an order block, all of this down closed price action, when this candle, when we get a close above it like we see right here, that turns into now an order block. Once we got that, I could have moved my stop to this low right here and let this trade continue to play out towards our stretch, our higher time frame target, or 1.5 standard deviation, which lined up with that swing high. And we hit it to the tick. If I would have properly managed my risk, and if I was willing to stay in this trade for an entire hour, that's how long this trade played out for. 59 minutes was from the entry to when we hit that high. I would have been able to capitalize on almost a 100 handle move. I got a 60 handle move in how long? I got 60 handles in 12 minutes. That's really appealing to me. I would rather be in a trade just for 12 minutes, get a majority of the move, cut it, and walk away. But if you're really trying to teach yourself to stay for these longer moves, then it's time to start analyzing retracements. because you will not just get a straight line to these targets. You're going to get retracements in between like we see here. And every time we put in a swing low followed by a close above those down close candles, we move our stop loss to that level. So our stop loss would have been moved to here. We run that, make a higher high, we get a retracement, we get a low, and we close above it right here. Then we move our stop to this swing low, and then we hit our target. That is proper management of the trade, and I did a poor job. I still walked away with 60 handles. I still walked away winning on this 30-minute reversal strategy, which we just went over. But if you really want to capitalize on the value that these higher time frame trades give, aka the 30-minute reversal, the hourly reversal, or the 4-hour reversal, those all have the potential for big, huge moves like you see. Okay? These are very helpful in understanding or really challenging yourself to hold for these bigger moves, because bigger moves never come without retracements. Retracements are inevitable. And I personally am not very good at handling retracements. I don't like it. I think I've been burned too many times understanding where the retracements are going to happen. And then I think it's going to be here. Then I get stopped out for break even, or, I miss the trade because I get stopped out on the retracement, not managing it appropriately. But this is how you run for those bigger trades, and you can do it using the 30-minute reversal model. So that's it for this video, guys. If you appreciate content like this, consider liking, subscribing, and we'll see you in the next video. Take care. That was some good analysis. That was some good analyses. Isn't that crazy, though? Look at that. I didn't do that in the video. Didn't talk about, but that's just crazy. I'm blown away on the precision. I'm blown away on the precision. It's crazy. But this, you guys just saw me take that 30-minute. That's the first time I've taken it during the New York session. I've taken it in the Asia. I've taken it pre-market because the setup was there. But this is one of the first reversal trades that I've been able to take. I've been watching it for about 3 weeks now. I've been watching and monitoring him for 3 weeks. And it worked out great. It was a 30-minute reversal, but it also lined up with this breaker. You could have said, "Oh, I didn't see the 30-minute reversal, but I saw this breaker," and you could have gone long based on the breaker easily. Easily, that would have been a good trade, and it would have worked out nicely. So when you see different models can actually overlap with other models, and it can just add to your confidence level. So it's really helpful. I can take that 30-minute analysis, that 30-minute model, and I can overlap it with the breaker model that I have. I can overlap that with the inversion model if I was a little concerned that we were just going to drop here. Well, guess what? You could have got long when we closed above this fair value gap right here. This would have been the inversion entry. Boom. 1 minute inversion entry. Valid. We swept lows. We didn't grab a swing high. Your stop loss would be moved to break even once we hit this high. Your stop is now protected and it runs for target. So you could have used any of the models that I teach to be able to capitalize on this trade. It's just understanding, really the key is understanding where the target is. Where is the draw and liquidity? Are we in high resistance or a low resistance market currently? Understanding where we are helps you in your execution. And that's that. We're going to call it a day there, folks. Great day, great win, great analysis. So I'm going to call that a day. We'll be back here tomorrow More than likely, I'm going to be here in the PM session. I have a real estate office meeting that I help lead because we're coming into the spring season, I'm committed to that on the real estate end. So I don't trade on Tuesday mornings. So I'll be back Tuesday afternoon, maybe over lunch. I tend to, there's some lunch moves that happen really nice. So I may take a look at the lunch market or the PM session. Other than that, stay safe. Good trading, guys. God bless you. And we will see you all tomorrow. Take care. Bye-bye.